What's up guys, Joseph Gordon right here. I'm super excited to bring you this brand new video. So in today's video, I'm just going to be unveiling to you how I day trade today. Like, I'm going to tell you the entry strategy, or the reason why I entered, the reason why I exist, and my risk management strategy. So without further ado, let's get down into the video. So welcome back guys. This is my chart. This is my chart. This is my trading view chart. So why I called for the signal in the morning was because price formed a chart pattern that I understand, like this: impulsive move, correction, impulsive move, correction, and it thereby forms double bottom. So upon the bullish confirmation, I went in for a buy, then I took my profit from here. So initially I was waiting to take my profit at this zone. This was where I was waiting to take my profit, but price makes some hesitation at this level. That was why I exited, because if you want to check it from our Fibonacci retracement from the recent high to the recent low, you will see that this is our hot spot zone, like our zone of entry, which is, we make use of 0.5, and also we also make use of this level too, 0.61 or 618, sorry. So I exited because price was making hesitation at this level. That was why I exited the trade, because it is good to cut your profits than to wait for market to come back to hit you in loss. Although we are in line with the trend, because for the past, let me say, couple of days back, price has been moving upward, like just trending up on and up. So let me show you my Telegram channel. This is my Telegram channel. This was where I called for the signal. In the morning. Sorry. This was where I called for the signal in the morning, that when price get to this particular zone, we should be expecting a buy. So this was my initial TP and this was my stop loss zone. So that's that. So when price was going, then I screenshotted it and tightened my stop loss from where it was. If you can look, my stop loss was at this recent low, so I have to adjust it from that recent low, because price has given me a go ahead, like confirmation for me to go ahead. That was why I adjusted my stop loss. So as price keeps surging up, I closed at these areas. So that's pretty much it. So my risk management strategy is pretty simple. So when price was going in my favor, I entered with one entry. So when it goes in my favor, upon this confirmation, I break even, then I added another one. So as price keeps surging up, when price gets here, I exited, because the market is exiting at our 0.50. So that's pretty much it. So that was why I bought this trade earlier this morning. So I think I also, let me explain why I sold at this level. You can see from the bigger picture, we have price coming up like this: impulsive move, correction, impulsive move, correction, impulsive move, correction. So I picked my horizontal line, my trend line. So when I was waiting for price to come here, as price come here to make the third touch, then I sold from there down to this place. So after that, I now wait again, that if price should break this trend line again, we should be shorting. If price break this trend line, we should be shorting. So as price closed above this trend line and it was coming to retest that same level, that was why I short from there. I short from here, and my take profit was here. So my stop loss was here as well. I used the recent high as my stop loss, which is me risking 28 pips to catch, almost times 2. Yeah, it's even equivalent to times 2, because with the trade management strategy that I use, it's equivalent to 1 to 2 risk to reward. So that is pretty much it. That is that for that. And what else? You probably might be wondering that what is this blue line that is showing on my chart, this particular blue line. This is Fibonacci retracement from the bigger picture. I make use of Fibonacci very well on my day-to-day trading activities. So how I get that blue line was pretty simple. This is my high and low of the week, and this is Fibonacci retracement level. So how I get this is an impulsive move. I was waiting for price to come. Initially, I was waiting for price to come to this zone. So that was why I drew counter trend line. As it was forming double bottom here, that was why I bought. This was my point of entry initially. So as it was making a movement here, that was why I entered. So this is my 618 level. Let me plot the Fibonacci retracement for easy understanding. This is our recent low and this is our recent high. So this is our 618 level, like as I said the other time. This is our 618 level. So I drew the counter trend line that when price get there, I will buy. So that's pretty much it. So without leaving any stone unturned, I think I've explained the reason why I entered and the reason why I exited. So that is that for that one. Thank you guys. So that's that for that one. So it's pretty much simple. My entry strategy is very simple. Likewise my exit, like as I said earlier. So I entered because of chart pattern, which was the W chart pattern, which is reversal or continuation to the upside. That was why I entered, and why I exited was basically much because my Fibonacci level is that price is exiting at Fibonacci level. That was why I exited. So concerning my risk management, I risked 1% of my account. Risking 1% of my account, I entered in the first position. So as price keeps surging in my favor, I break it from then, added another position. So that is how I kept on adding position till the price get to my take profit zone. So if you like this type of content, smash the like button, subscribe, turn up on post notification, and share to your family and loved ones. Thanks for watching. Peace out, guys.